Hey everybody, welcome back. So today I'm going to be talking about a stock that has been trading sideways that I actually bought, a couple months ago, a leap option. And if you don't know what a leap option is, it's just basically a call option that expires in over a year. I was hoping the stock would go up, but as you can see, so the stock ticker, by the way, is HIMX, Himax Technologies. So Himax Technologies is a supplier located in Tainan City, Taiwan. And if you look at the last couple months, it's really been trading around $10, $11. Dipped down all the way to $9. But for the most part, it hasn't been moving a whole lot. And as frustrating and as stubborn as this stock is, I actually have a great play today that I'm going to show you that you can use to possibly 4x your money. Okay, if you like this content, if you want me to make more content like this, make sure you smash that like button, subscribe, comment below if you have any questions. I'm more than happy to help. So without further ado, we are taking a look at Himax Technologies. And normally whenever I take a look at any kind of company, I like to use Finvez just to kind of see a quick overview of some fundamentals. The reason why I bought into it in the first place was because it had a really low P/E ratio, so price earnings. So this is definitely a value stock. It's trading at a value that is pretty good for the price and the sales that they earn, each year. The RSI right now is slightly overbought, so people are bullish on this company, and so we could see movement, but for now, we can't be sure. It does say the earnings per share this year is quite high. So next year we'll see, right? I think I'm still bullish with my leap option. I still have hope. But today we're not talking about leap option. We're talking about strategies that will 4x your money using pretty low collateral and just has a high potential in making you a lot more money. Okay, so and taking a quick look at Yahoo Finance, we're not taking a look at the fundamentals because even though I'm long on the stock, I'm trying to make just more money through a specific option that I'll talk about later. But I always go to Yahoo Finance. I like to take a look at the Bollinger Bands just to really take a look at some of the moving averages. And so right now, right, as you can see, okay, so the moving average of the stock has been relatively, smooth, for the most part, in the last couple of months. Okay, it has dipped a little bit here and there, but I really think this stock, until it breaks out, I don't think, I think it's a pretty good stock to trade sideways on. Okay, so you don't have to use the stock. I'm just simply showing you how much money you can earn if you use the strategy. And I happened to run into Himax because I was looking at my portfolio and it just hasn't really moved a lot. Okay, so going to Robinhood, I'm going to show you what this option will look like. And so the first thing we're going to do is we're going to sell a call option. Okay, so now typically I would sell the call option either below or above. And in this case, I'm still going to do it, but I'm going to go ahead and sell the call option above the strike price. Okay, so I'm slightly more bullish on this stock, as meaning that I think it's going to go up a little bit in the next week or so. I want to keep my expiration date as just expiring as soon as possible because time decay is on my side. So I want this to decay as quickly as possible. I want this to expire and the stock to not have time for a lot of movement. Okay, so I'm going to sell the call option and I'm going to buy the call option above it and buy the call option below it. Now I'm going to go to custom and I'm going to set my ratio to selling 2 call options of the same call option I sold. And now if you take a look, okay, at the Robinhood chart, the stock can move up all the way up to 4.5% and I will still make a profit. Now I can go down up to 2% and I will still make a profit. And if it goes up basically around the 1% mark, I 4x my money, right? So I'm risking $10 to make $40. Now, if you multiply that, let's say I risk $100, I could potentially make $400. And if I, just so you can keep go on and on and on. If you risk $200, you can make $800. You really can make quite a bit of money on this option trade. especially if you think Himax is, gonna continue to trade sideways. Okay, now the other option that I always like to use is the Iron Candor. So we're gonna do, I'm gonna show you how that works. We're gonna buy a put, and we're gonna sell a put above the strike price. Okay, so now, we would collect, a premium of $13 if the stock doesn't move down more than 4.5%. But we're gonna go to the call side of things. Okay, so now we're gonna do our call side. So we're gonna buy a call, and we're gonna sell a call right underneath the strike price. Okay, so this sets up this little plateau where now you see that if a stock goes down about 3%, then you still make a profit, almost 4% actually, and the stock goes up about 1%, then, or even 3%, you still make a profit. And you're making $35 off of a max loss of $15. You don't have to be as precise with the Iron Candor, right? In the last spread, you had to be pretty precise to maximize your profit. But in this case, it gives you a lot more room. Basically gives you about, like a 4% range of how much the stock can move for you to maximize your profits. Now I want to show you one more thing. Okay, let's say you're more bullish on the stock. You think it's going to go further up than it is going to go down. You can totally change your spreads, right? You don't have to do the spreads that I do. So you can just move it up a little bit. So we'll go ahead and buy the puts at, right below the strike price, and we'll sell the puts at one strike above. And now we're going to go to the call side of things. And then we're going to buy a call and sell a call right beneath that. Okay, now as you can see, it can go up all the way 8% and we will still make a profit. It can go down slightly and you will still make a profit. Okay, so you can sort of adjust that. You can sort of, kind of do a few different plays, but you just have to make sure that you keep it even, right? If you don't, you would fall back into, a trade that's similar to a butterfly. So what I just did was I actually bought and sold a call option that overlaps. Okay, and as you can see, the max profit is $43, and my max loss is $7. Okay, so you can really try different strikes. You can to really maximize your gains. And I think that is actually a great play because it gives you a lot of room as well. It doesn't give you as much room as the plateau as the Iron Candor before, but if it happens to move down about 1%, then you're maximizing your profit to $43. Okay, so even though the max profit is higher versus the loss that you could potentially lose, I honestly would do the previous trade because it's hard to predict exactly how much the stock is going to move, even though you still will make money, if the stock moves a little more, but it's just, having to be that precise to make a good profit, I think it's just hard. So that's why I honestly prefer the Iron Candor, but really it's just up to you, right? If you have a preference, you do your thing, and leave a comment below on what stocks that you think is trading sideways. Again, this is simply just an example, only because I found out that the stock that I had bought a leap on was trading pretty sideways. And if you were wondering what a leap is, I've covered this in my other videos, but essentially is you're simply buying a call option that expires a year or more out. So in this case, I would buy a call option expiring January 2023. You usually go deep into money, so you would pay about $655 if I were to buy this leap option. The stock really only has to go up 3% and you're making a profit. You can sell your leap option at any time, so you don't have to hold on to it for a year. And the cash outlay versus the amount of money you would have to spend if you were to buy 100 stocks is a lot less, right? If you were to buy 100 stocks at Himax right now, it would be about $1,120. But if you were to buy a leap option, it would be about $655. Okay, that was just a really brief overview. I just wanted to touch base, just with the leap option that I bought, just to let you know what it is. But again, if you like this content, make sure you smash that like button, comment, subscribe. Until next time, guys, I will see you guys again in the next video.